In the early 20th century, John D. Rockefeller's empire dominated the American economy. Today, his influence still casts a shadow over Wall Street. The methods that built his fortune now shape global markets. But what happened to the American dream in this new world of power, trust, and inequality? It's time to revisit the legacy of a man whose empire never truly fell. Sound familiar? How a single man built an empire that still shapes our financial system today. John D. Rockefeller was not just a man. He was an idea, a symbol of how ambition and strategy could reshape an entire economy. His empire, built on oil, extended its grasp far beyond barrels and rigs. It bled into Wall Street, into the psyche of American power. The systems he set in motion were the same ones that would carry us through the Great Depression. And they still work today, only now they're more invisible. When Rockefeller established Standard Oil, he wasn't just after control of a market. He sought leverage, power over every part of the industry, refining, transporting, selling. All roads led back to him, and more importantly, back to Wall Street. His innovations in control, monopolies, trust agreements, stock schemes, gave him the ability to manipulate an entire sector. But it wasn't just about the oil. It was about trust. Rockefeller understood the core principle of market manipulation: create dependency, then consolidate power. With Standard Oil's control, entire industries became reliant on his network. Like a puppeteer, he pulled the strings from behind the curtain. And Wall Street? It was his playground. Rockefeller was not just a businessman. He was a creator of systems that would evolve into today's corporate monopolies, creating vast wealth for those who controlled them, and abject poverty for those who didn't. At the peak of his reign, Rockefeller was more than just a capitalist. He was a king who ruled not just over oil, but over the very financial infrastructure that shaped the economy. What he understood, and what many still don't, is that the game wasn't just about having money. It was about controlling where that money went. But as we examine his empire, one question arises: was it ever really about the oil? Or was it something more insidious? What Rockefeller did to create his empire isn't what's most important. It's what his methods created: a system of inequality, one that still holds sway today. And to truly understand how this system persists, we must look at the mechanisms he used. We'll come back to that, unraveling the secret tactics that gave Rockefeller control over Wall Street and how they still work today. When we think of Rockefeller, we often think of oil. But oil was just a front. The real game? Trust. Rockefeller's genius wasn't just in extracting wealth from oil. It was in extracting power from the trust he built in others. His strategy wasn't new. It was simple. Control the essential, create a web of dependencies, then let those dependencies work for you. The truth is, Rockefeller wasn't building just an empire. He was designing a system of influence. And that system extended far beyond the oil fields. Through trusts, he consolidated power by making his companies appear as independent entities while controlling them from behind the scenes. It wasn't just about owning assets. It was about controlling them through an invisible hand. This was the genius of trust agreements, and it became the core of modern financial systems. Rockefeller's impact on Wall Street wasn't just through stocks or commodities. It was through the power of leverage. By controlling the infrastructure of industries, he shaped the market. He understood that power wasn't just about what you owned, it was about what others depended on you for. For every dollar invested, there was a dollar's worth of influence. For every stock sold, there was a piece of the market taken, and that influence didn't just grow, it multiplied. It was a financial burden. What Rockefeller controlled fed into itself. It wasn't just power, it was sustainable power. But let's pause for a moment. Sound familiar? These same tactics are in play today, just in different forms. Instead of oil monopolies, we have tech companies, hedge funds, and high-frequency trading. We'll come back to this. Confidence is collateral. Rockefeller knew how to make people believe in him, and that belief became his greatest asset. Next, we'll see how Rockefeller's methods created inequality that would shape the future of finance and set the stage for the eventual collapse of the system he built. How Rockefeller's reliance on speculation, debt, and leverage paved the way for systemic inequality. Rockefeller's empire wasn't just built on oil, it was built on debt and speculation. The methods he used to amass wealth were not about organic growth. They were about financial manipulation. Debt was the invisible thread that tied his empire together, but it wasn't just any debt. It was leveraged debt, the kind that amplifies risk and magnifies reward. Rockefeller understood that control over money wasn't just about holding assets. It was about controlling the flow of money itself. Through speculative investments, he could accelerate the expansion of his empire without using his own capital. He wasn't just playing the game, he was redefining the rules. The more debt he took on, the more he could expand his control. But it came at a price. The real danger lay in the imbalance created by this model. Wealth was accumulated not through merit or innovation, but by strategic manipulation of the financial system. Rockefeller's wealth grew exponentially, while the working class, the laborers who built his empire, remained trapped in a cycle of poverty. This was not just business, it was a system of economic control. In the beginning, the illusion was strong. Workers were grateful for jobs, investors were dazzled by returns. But as more leverage was added to the system, the cracks began to show. The system became fragile, vulnerable to collapse, and those at the bottom, who had never truly benefited, began to suffer. As Rockefeller amassed wealth, the gulf between rich and poor deepened. Wall Street adopted this model, high leverage, speculation, and risky investments, as the blueprint for future growth. But, like any house built on sand, it could only stand for so long. The speculative bubble expanded beyond Rockefeller's empire into the broader market. And when it burst, it revealed the cracks that had been hidden in plain sight. This is where the cracks started to appear, and yet it's only the beginning. The methods Rockefeller employed to accumulate wealth and power created an environment where inequality wasn't just possible, it was inevitable. As we look at today's financial system, ask yourself, is it truly different? Or are we just playing a different version of the same game? The signs are all too familiar. The cracks are showing again, and this time the stakes are higher. Let us explore how the system eventually collapsed under its own weight and how we are still living with its consequences. How the 1929 collapse was an accident and why today's markets are built on the same unstable foundation. The stock market crash of 1929 is often remembered as a catastrophic accident, a sudden disaster that blindsided the world. But the truth is far more deliberate. It wasn't an accident, it was the natural outcome of a system built on unregulated financial speculation, a system that had been slowly and deliberately crafted over decades by men like Rockefeller. In the 1920s, as speculation reached fever pitch, Wall Street was fueled by leverage. Banks and investors were borrowing and betting on the rise of stock prices. It was a bubble waiting to burst. This was the same speculative game that Rockefeller had played, leveraging debt to amplify his control. But back then, it wasn't just oil monopolies. It was everything: stocks, commodities, banks, all of it. When the market collapsed, it wasn't just a crisis of confidence, it was a crisis of structure. The same systems that had worked for Rockefeller, control through financial leverage and speculation, had led to systemic fragility. When the bubble burst, it revealed how deeply interwoven Wall Street and the broader economy had become. The rich lost vast fortunes, but the poor were left to bear the weight of the collapse, much like they always had. Fast forward to today, and the game is still the same. Sure, the names have changed. Rockefeller's monopolistic empire has given way to a new class of oligarchs, tech giants, hedge fund managers, and global investment firms. But their methods are eerily familiar. High-leverage speculation, risky bets, bubbles that inflate until they can no longer hold. In fact, we are witnessing this dynamic again. The tools have changed, algorithms, high-frequency trading, and global markets, but the underlying mechanics are still the same. Financial speculation and leverage still dominate Wall Street. The people at the top, they're playing with other people's money, amplifying their control, and growing the divide between the few and the many. Let's dive into the mechanics that still rule Wall Street today. We'll explore how these systems continue to shape our economy, our lives, and our future. How today's financial technologies are just modern versions of Rockefeller's power plays. Rockefeller's empire was built on controlling essential industries. But today, power doesn't rest in oil fields or monopolies. It rests in algorithms. The tools have evolved, but the game is eerily similar. The financial elite may no longer control oil refineries or railroads, but they control the flow of data. Control the data, and you control everything else. Today's power brokers, the hedge fund managers, tech billionaires, and corporate giants, operate not through tangible assets, but through invisible algorithms. These aren't the monopolies of old, but the financial equivalent. Digital platforms that control vast sums of money without owning the actual resources. What makes them so powerful? Leverage. But instead of oil fields and railways, they leverage code, data, information. They have mastered the art of creating dependency not on oil, but on technology itself. Apps, algorithms, and digital platforms are the modern versions of Rockefeller's trust agreements. In Rockefeller's time, he controlled the infrastructure that people couldn't do without. Today, digital platforms like Facebook, Google, and Amazon are the infrastructure. They're the new Standard Oil, and they're not just affecting oil prices, they're controlling entire markets, influencing consumer behavior, and shaping the global economy. They hold power over our lives, and we don't even see it. But here's where it gets unsettling. The control is invisible. In Rockefeller's day, you could see it. You could see the oil refineries, you could see the railroads. But today's empire operates in the digital ether. These platforms, powered by algorithms, control the flow of information, money, and power without us even knowing. The system is more efficient, more automated, and more dangerous. Is this new technology really any different? The faces have changed, the players have changed, but the structure is still the same. The same systems of leverage and control that Rockefeller used to build his empire are being used today, only now they're invisible. And the ones who benefit? They're still the same. Those at the top, pulling the strings in ways we can't see. Next, we'll examine how these invisible systems of control have created a new set of challenges and the cracks that are starting to show once again. How Rockefeller's enduring influence shapes today's market, and the moral hazard that keeps it all running. Trust. It's the foundation of Rockefeller's empire, and it's the foundation of today's financial system. But here's the catch. Trust, in its purest form, is supposed to be about belief in the system. The belief that things are fair, that the rules apply equally to everyone. But what Rockefeller understood, and what we're still learning today, is that trust doesn't always serve fairness. In fact, it often serves the ones who can manipulate it. Rockefeller didn't build his empire on raw power alone. He built it on trust. But not the kind of trust that comes from goodwill. It was the kind of trust that made people dependent on him without even realizing it. He made them believe they needed him, and when you can make people believe they need you, you control the game. This wasn't a market based on value, it was a market based on perception. And it still is today. In modern finance, this trust manifests in the psychology of confidence. We trust the system even when it's rigged against us. We trust in the markets even when we know they're manipulated. We trust in the big institutions because we believe they know better. But the truth, they don't. The game is rigged. And like Rockefeller, today's financial titans are using trust as a tool to perpetuate their power, not to build fairness. It's a moral hazard. The more we trust, the more we gamble with our future. The system depends on our faith in it. Without that trust, the whole thing falls apart. But here's the problem. Once trust is lost, it's hard to rebuild. And as more and more people wake up to the truth about this system, the cracks begin to widen. What do we do about it? The first step is understanding the system's true nature. The market isn't a fair playing field. It's a game of leverage, perception, and psychological manipulation. But if we're aware of this, we can start making more informed decisions. We can stop trusting blindly, and we can demand accountability from those who control the system. Practical takeaways. Trust is valuable, but it's also fragile. Always question the system. Recognize the psychology of confidence. The more confident the system appears, the more dangerous it can be. Understand the true cost of your trust, because once it's given, it's hard to take back. In tracing the legacy of Rockefeller's shadow empire, we see how his strategies of control, debt, leverage, and speculation have shaped not just the financial systems of his time, but the very fabric of today's global economy. What began with oil monopolies and trust agreements has morphed into a digital empire powered by algorithms and invisible control. The game may have changed in form, but the mechanics are hauntingly the same. And as we've seen, the greatest asset in this system is trust, the belief in fairness that keeps the system in motion, even when it's rigged against us. But as more people wake up to the truth of this cycle, the question remains: can we break free, or are we doomed to repeat history? If you found this story eye-opening, don't forget to like this video, comment your thoughts below, and subscribe to this channel for more deep dives into the hidden forces shaping our world. Do you think the system can ever truly change, or are we all just pawns in an empire that's been building for over a century? Let's hear your thoughts.